premium with the Shanghai Futures Exchange, and I think silver closed today at $32.95 equivalent. So, well, maybe not, in the next week or two, but in the next few months, even maybe, probably before the end of the year, because this is a very significant level. As I said, it's like a pressure cooker, or let's say you're on the beach playing with a beach ball, and 30 is like the water level. So once the ball gets out from underneath and pops above the water, it goes very high. So I think that's what is just a technical level that's very important.
In today's market recap, hot commodity silver outpaces gold as buying gains momentum. Gold's record-setting rally may have captured the headlines this year, but it's silver that's running harder and faster as the less glamorous metal benefits from robust financial and industrial demand. Silver has soared by more than a quarter this year, outpacing gold and making it one of the year's best performing major commodities. Yet, in relative terms, silver is still cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. The two metals move largely in tandem, as both offer similar macro and currency hedging properties, with gold hitting a record on central bank buying, retail interest in China, and a resurgence in bets lower U.S. interest rates are on the way. Silver's gone along for the ride. Now we'll show you the best clips of the latest interview where a financial expert discusses this macroeconomic events in detail and explains you how to be positioned for maximize your stack. Smash the subscribe button, hit the like button, and share this video with someone who loves stacking silver. Enjoy the episode.
Premium with the Shanghai Futures Exchange, and I think silver closed today at $32.95 equivalent. So as I've said, I think before with you, that the price now has been set in the Far East, and this 30 level, of course, is just like the beach ball getting out of the water, popping out. That's where the line was, and we got up to 30.83 this afternoon. In the spot price right now, we're at 30.63. And gold as well is at 24.15, so it's back above 2,400. And I think what it shows is that the new all-time high in gold is being confirmed in silver, because we've got a new, let's say, 3.5 year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. So I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate. Data-wise and reason for this happening, I don't think there is much. One thing, though, I would say, geopolitically, the meeting between Xi Jinping and Vladimir Putin. Vladimir Putin flew to Beijing yesterday. I think it's very significant. It's showing that Russia and China are both behind, each other, and it's a strong message to the West that they're going to do everything to move forward with their alternative multipolar world. And I think this is reflected in the precious metals a bit, because it means a weaker dollar going forward. Well, maybe not, in the next week or two, but in the next few months, even maybe, probably before the end of the year, because this is a very significant level. As I said, it's like a pressure cooker, or let's say you're on the beach playing with a beach ball, and 30 is like the water level. So once the ball gets out from underneath and pops above the water, it goes very high. So I think that's what is just a technical level that's very important. If you look back 40 years as well, gold is, this breakout in gold is very significant. And I think we're just in the beginning, and silver as well. So it's all very encouraging for us, stackers of gold and silver. At the same time, though, it's pointing to the fact that our currencies are becoming worth less and less, which isn't a great thing for the majority of the public. They did well up until recently because the central banks were able to use this strategy called QE, or money printing, and people bought into it for the last 15, 20 years, and it helped keep money cheap, helped keep the currency strong, because the bonds that backed this currency, the government bonds, the debt, were always going up and up in value, and the rates were going down. But now everything's turned, in my opinion. And with the bond market turning, that means the currency is turning down. And like you said, a lot of the so-called value, not even value, but the phony wealth that's been created over the last 30, 40 years, a lot of that is going to flow into real things, and I think real things like gold, silver, commodities have been heavily undervalued, and it's just a rebalancing.
Silver prices are gaining significant attention as indicators of broader economic and monetary trends. Experts are increasingly viewing silver not only as a valuable commodity, but as a strategic asset in the face of currency risks and economic instability. Here's an easy-to-understand explanation of how recent economic conditions are influencing silver prices. Economic uncertainty and silver prices. Recent analyses indicate that silver prices could rise significantly in the near future due to a combination of factors, including industrial demand, investment trends, and monetary policies. For instance, the constrained supply coupled with rising demand from sectors like solar energy are expected to push silver prices higher. This is particularly significant as the economy recovers and industrial demand increases, potentially driving the price of silver to reach around $26 per ounce by mid-2024, with forecasts suggesting it could climb even higher to $30 by 2025. Impact of monetary policies. The relationship between silver and gold is crucial in understanding silver's price movements. Silver often follows gold, but with greater volatility, which means it can offer higher returns during market rallies. Current forecasts suggest that both gold and silver will benefit from trends like de-dollarization, where countries reduce their reliance on the US dollar, boosting the demand for precious metals as alternative reserves. De-dollarization and its effects. The trend towards de-dollarization is significant as it underscores a shift in global monetary reserves from the dollar to other assets, including silver. This shift is driven by the desire to diversify holdings and reduce dependency on the US dollar amidst geopolitical tensions and economic policy shifts. This trend is expected to continue supporting gold and silver prices in 2024. These insights suggest that silver, alongside gold, is likely to remain a critical component of investment portfolios, particularly as a hedge against currency devaluation and economic uncertainty. As analysts anticipate, the coming months and years could see significant upward movements in silver prices, reflecting broader economic trends and strategic shifts in global finance. Now, we'll show you more clips, but first, like and subscribe so you do not miss out our daily videos.
Because I've read history about currency collapses and crises and economic chaos and debt problems. If you go back to the French Revolution, they called it the Reign of Terror. There's a, everyone knows about the guillotine during those days. It was politically very unstable, and then eventually a strong man came out of that called Napoleon Bonaparte, And the same thing happened just over 100 years ago in Germany. We had war, and then the German Empire collapsed. The Emperor Kaiser Wilhelm abdicated, and Germany became politically chaotic. There is talk that Bavaria was going to break away from the German Empire, and there's loads of political assassinations. And it's all to do with the currency. When the currency becomes almost worthless, society becomes chaotic, and it's just a reflection of the currency. And I think the same thing is happening not just in Slovakia, but look at the United States. There's huge division politically, and I think that's all to do with the currency as well. Here in the UK as well, there seems to be no hope that either party can do anything good. So, for example, we're going to have the general election sometime this year. But even if the Labour Party were to win, most people don't expect anything better. So, yeah, I think that's what it means. And if you look at like South American countries, for example, they've always been very politically unstable, military coups and everything, revolutions, and they've never had sound currency, at least for the last 100 years. So that's why I think is one of the symptoms. The other symptom, of course, is, societal mores or morality that goes down the drain, the rule of law. Here in the UK, for example, I saw the other day, there were these Just Stop Oil protesters. They're like these green climate change people. They blocked the road so people can't drive to work. And this truck driver came out of his truck in central London, and he just pushed the people on the floor, off the road. And guess what? The police came and arrested him. They didn't try to get the people off the road so people could drive. So it's all like symptoms of that, in my opinion. And of course, also the price of food going up, and it's going to keep going higher, I think. It's all a symptom of a dying currency. As well, the FTSE 100 is trading at record highs. But if you go back to 1999, 2000, where we had that dot-com bubble peak in the stock market, the Dow gold ratio was around 46. The FTSE gold ratio was around 38. And I think right now the Dow gold ratio is around 16.6. So, yeah, melt-ups are very dangerous, because people who don't know about what we're talking about here, they think everything's fine in the economy. If the FTSE is at all-time highs and the Dow trading 40,000, everything must be okay. But you need to look at these ratios. I think it's really important. So that's what I think the melt-up is pointing to, continued currency debasement. But, you read the FT, the Wall Street Journal, Market Watch, you watch CNBC, no one's talking about that. They're just looking at the nominal figures, and to them, it looks great.
What do you think of Mario's take? Is silver headed to $50, or will the big banks dump the price again? Post in the comment section your honest opinion on where are gold and silver headed, and watch this video right here because it's a perfect fit for you. I see you on the other side.